Dear viewers, welcome to another edition of Expert Speaks. In this edition, the expert of the week, fund manager Harini Dedhia, is going to talk to you about the exciting world of quant investing. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to give you information about the quant investing, I have brought to the studios my eminent faculty, distinguished fund manager, Miss Harini Dedhia. Miss Harini Dedhia is not new to you. She has done multiple videos in the past. She is working as head of research and a fund manager at Tamora Investment Managers. By education, she is a BA honors with specialization in politics, economics, and advanced mathematical models. She started her career from New York, working with a hedge fund. She moved back to India, and in her initial phase, she worked with Ghalla Bansali stockbrokers. She executed the Truffle Investment PMS division. Currently, she is working with Tamora Investment Managers. Welcome to the show, Ms. Harini Dedhia.
Thank you, Dr. Bhatt. It's great to be back on your show. As always, it's looking forward to a great discussion.
Thank you, Harini. Your videos have received popular approval of my audience. We are receiving a lot of good feedback. I look forward to have you on my channel multiple number of times. Let's discuss today's topic that I have picked up, quant investing. For the beginners, what's quant investing? Is it something new? For how long it is here? Can you give me a brief history of what's quant investing?
Quant investing is almost as old as investing itself. While the label itself is daunting, it simply implies that instead of having a human being make decisions at every given point of time on portfolio actions or on wealth allocation, you have a set of rules that are laid forth and a execution policy that follows that rules completely to the T. So let's say you have a rule that says, I want to create a portfolio that only buys the cheapest companies in Nifty 50. That itself could be considered quant investing. In fact, one of the more popular funds we have seen globally in quant investing is one that is run by Jim Simons called Renaissance Technologies that has been in existence since 1982. So there has been a surge in quant investing of late, but the concept itself has been around for a very long period of time.
Okay, thank you, Harini. Now I understood what's quant investing. We have understood the quant investing. But what are quant funds? Is it same? Is it something different? Can you give some information about what are quant-based funds?
Sure, sir. So quant-based funds are funds that are essentially laying these principles before executing a particular portfolio. So the example that I gave, like if I wanted to create a value fund where I said that I will only buy the cheapest companies in Nifty and create an equal weighted portfolio of that. So I've laid forth many rules in that statement, right? I've defined my universe, which is Nifty 50 stocks. I have defined the allocation strategy where I'm saying it's equal weighted. And I've defined the factor or the criteria on which I'm basing this quant fund on, which is the valuation parameter. So when the logic of something is completely defined in its entirety, a quant fund can be established where no human intervention is required after the logic has been defined. However, it is important to remember with quant funds that the logic itself still is determined by a human being. So you cannot really get away from that human intervention, though after the logic is defined, you do not have emotions straying you away from the logic. So in a nutshell, that is what a quant fund would be, a complete set of rules that can help you execute a portfolio from determining the factor that helps you understand what companies to pick in the portfolio to determining what is the subset from which you're picking the company and what is the allocation that you're going to give to each particular company in that.
Okay, so in the investing world, it's always said it is the emotions which will overtake intelligence. Emotions are such a thing which will spoil any game. So here probably is it wrong to or right to say that the human intelligence has been pre-programmed what I need to do, and thereafterwards the emotions are not allowed to interfere with this particular process. so that your intelligence aspect as well as the spoilers in the form of emotions are kept out, thereby creating a better output from your investing exercise. Is it fair to say that about the quant funds?
Absolutely. In a way, it is absolutely correct to say that we've removed emotions and hence removed the temperament variable that really varies investment outcomes for the same particular product, for the same particular stock invested by multiple people. However, the caveat that I would always put in quant funds is everything in equity, as you know, comes with its own risk. So at points of time, it is important to also have human intervention. It is also important to have regular review by a human being, because what human intelligence can comprehend could be a bit ahead of the curve versus a computer whose logic is determined by the human themselves. Having said that, on a overall basis, when information is not an edge in today's market, because access to information and knowledge is so easily available, it is even more important to understand that investing outcomes are more determined by temperament and discipline rather than skill and IQ.
Harini, you gave an insight about how the quant funds work. We have active funds and we have popular passive funds these days. Now, which category the quant funds really fall into? Is it to be said to be an active fund, or because there is no human intervention here, should it be categorized as a passive funds? How do you see the categorization here?
That is a very interesting question. The way I look at quant funds, I would definitely not categorize them as passive funds, because there is an element of human intervention, like I said, in the formation of the logic itself. A passive fund implies that we have an underlying index and we copy the index blindly, whatever that index may be. So I would say a passive fund is a subset of quant funds because it is a rule that is defined. There is a rule that says, I will now copy the index as per the index's allocation on a certain time lag, right? That is how most passive funds work. So passive funds could be a subset of quant, but the definition of quant is still reliant on human, and hence I would say it would be a quasi-active fund.
Okay, it's a quasi-active fund, but not to an extent of intervention that happens in an active fund.
Correct.
Okay. Harini, you told about the quant funds, quant theories, you spoke about this. Is it a vast world, or it is just like one single type of quant fund is there, or even within the quant investing universe, are there different types of funds? Can you throw some light on this aspect as well?
Sure. So quant funds can be broadly categorized into two types. One could be a single factor quant, the other is a multi-factor quant. By factor, I simply mean what is defining that particular style of investment. Let's say a chosen factor is momentum, where you want to play whatever is the flavor of the month in the market. Or a chosen style could be, or a factor could be value, where you want to buy something that is available less than its actual intrinsic value. So quant funds can be categorized into these two parameters. Predominant amount of quant funds that we see in India today have at least two or more factors within them. So there would be a combination of, let's say, quality and growth, or there could be a combination of growth and value, or growth and momentum. So typically you have two factors that people use, and they can use multiple variables within each factor to define that factor. But typically we see more usage of two or more factors. So I would say there are more multi-factor funds available in India today.
Okay. Harini, you told about all these information about this quant funds. You did brief my audience on how it keeps emotions away. That's definitely a qualitative advantage over active fund managers. But tell me one thing, does it have any other advantage? At the end of the day, investors are looking for a better return. Quant investing, does it create a better returns than other types of funds which are available right now for investors to invest?
That's a very interesting question, and one that I think a lot of investors and advisors are grappling with and trying to figure out. I think equity markets by nature cannot be predicted. So it is very difficult to define which fund at what point of time, at over what horizon would be a better fund versus another. I think one thing that quant funds do enable us to deliver is probably a better night's sleep. That's how I look at it. The reason for that is because the rules are predefined, and when they really launch a fund, they would have done a certain amount of backtesting. They know in what scenarios does this philosophy or the logic of the quant fund work, in what scenarios would it not work as well. It is very easy to digest the outcome of the fund because you are given that disclosure beforehand that if so and so events occur, or if so and so market conditions occur, we are going to underperform, or if so and so occurs, we will do better than the rest. So in that sense, the absolute return might not be predictable. The number itself might not be predictable because equity market returns are not. But it is easier to live with the outcome because the logic has been laid in front of you and there is no element of surprise in that.
Okay. So it becomes more predictable than to say it generates a higher rate of return. It's by nature, yes, equities cannot exactly you predict how much returns you can get. And if you look at the landscape of equity markets across globe, for a similar parameters, different markets have given a different rate of return, which proves that you cannot predict it. You can invest and you can pay. Quant funds, for that matter, can give you a predictable rate of return. You know what could be the best scenarios or the worst scenarios which might unfold. To that extent, quant investing remains very relevant, very interesting for the investing community. Harini, while quant investing looks very interesting, we'll be failing in our duty if we don't talk about the drawback of the system. I'm very sure every system has its strengths and weaknesses. I presume quant too has its advantages and disadvantages. Can you tell, for the benefit of my viewers, what is the drawbacks of quant investing?
Absolutely. And this is possibly the most important question today when one really evaluates quant investing. I think the biggest drawback of quant investing today is it relies on past data, because data cannot be from the future, right? We've not invented time machines as yet. So there is a certain amount of empirical bias, as we call it, in quant investing, which means your outcomes or your output that you've generated, the logic that you've generated, is relying on something that seems to have worked over the last 20 years or 30 years. But we stay and we live in an evolving world. So nothing to say that, something happens and completely shifts the structure of the market going forward. For example, a quant fund would have frozen in its shoes in the March 2020 fall, right? It is at that point of time that possibly an active fund manager or a human being could have taken a stance and said, look, these assets are available at a certain price. I'm going to go ahead and buy them. If we survive this, we are getting them at a fire sale discount. If we don't survive this, we have nothing to lose any which ways. So at that point of time, I believe a human being's ability to react is far superior when there are these black swan or aberrations that occur that shift the structure or shift the nature of the market that we get involved in, simply because quant funds rely on empirical data. And empirically, in the last 20, 30 years, we've not seen a pandemic of this sort that could have helped a fund predict what would happen next. So that is, I think, the biggest drawback of a quant fund today.
Okay. Harini, that has been a good piece of information. But the crucial question is, if audience is interested to invest in a quant investing model through the quant-based fund, do we have funds running in India, or is just that a new concept which is being discussed today, or on practice on ground, are there funds to select for the investors?
Yes, sir, absolutely. In India, various AMCs are offering their quant funds. In fact, we at Tamohara also run a very popular fund called Q, which is based on the same principles.
So you said that quant funds are mostly available with almost all the mutual fund houses today. You also run a Q fund, which is very popular. Many of our investors are also invested on that. Harini, for the benefit of our audience, can you tell me a very frank opinion about What has been the experience of working with this Quant PMS account which you are running? You are literally handling over 300 odd crores of funds under different schemes. What is your experience and what's your message to the audience about the fund that you run?
Sure, sir. My journey in investing has been one predominantly of active investing. I started managing outside money or being a fund manager in 2017. And in 2022, which is this year, we launched our Quant fund as well. The journey has been very interesting since I've done both sides of the spectrum. Our Q fund is essentially us trying to make this point that as a smaller organization versus the larger mutual fund houses in India, it is very difficult for us to create a knowledge edge or an information edge on some of the largest companies that these mutual fund houses have been covering for a very, very long period of time. We realized that the only edge we can create over here would be one of discipline. So if we were to take our investment philosophy and distill it down into a scoring mechanism for companies and for businesses and use that to grade all the top 200 companies in India, we would be able to deliver an outcome with a lot more discipline, where almost like in a college, you have every semester a dean's list come out. Our scoring mechanism, Q, comes out with a dean's list that becomes the portfolio every 6 months. And we've seen that discipline that it has been able to instill is something very, very unique and special, and that we also learn from on our active side, honestly speaking. So I'll give you a very interesting example. If I were an active fund manager who's made money in a company as brilliant as Eicher Motors from 2010 to 2018, it would be very difficult for me in 2018 to accept that something has shifted in the business, that there is something that is fundamentally going through a correction or a consolidation in the business itself. And that is already available in the numbers, but I will always make excuses for it because my emotions are at play. Because 8 years I've seen this company deliver returns for me. I have grown close to the management, perhaps. I've grown attached to the company, perhaps. But the Dean's List is ruthless. The Dean's List says if you are not on the top 10% of the class, you can wait for your turn again. So in calendar year 2018, Eicher Motors still grew its sales, but there was some degrowth in its cash flows, which was picked up by the model. And the model decided that it is time for Eicher Motors to be out of the Dean's List for now. What it has done since then has saved at least in time value of money, because Eicher Motors has just come back to the same price it was back then in 2018. So emotions won't let an active fund manager take that call possibly at the right point of time. Whereas if somebody is going just purely by the numbers and purely by what your investment philosophy guides you to do, we've seen that the outcome at those points of time is a little bit better than what would have been the case otherwise. So this has been our experience. And we also learn from Q, where we've learned a lot of discipline from Q, where it tells us that in numbers, there is truth. Numbers don't lie. Data does not lie. So we use this Q as a tool even to inform our active side, where if something is going wrong in our scores, it tells us, hey, wake up, smell the coffee. So it has been a joint learning experience. Our experience on the active side has helped form our philosophy, which we've then crystallized into Q. And Q shows us the mirror every once in a while on the active side.
Very interesting concept. I have sat through your presentations multiple number of times. It looks very interesting, and it's heartening to know that you have designed something which is very safe, which takes out the emotion, but you still stay with the quality. I wish you all the best. Dear viewers, if any of you are interested to invest in the QPMS run by Ms. Harini Dedhia, you have an option. You can just send me a WhatsApp message on the number that is shown here on the screen, and we will help you to invest through the QPMS run by Harini Dedhia through Tamara Investment Managers. You can also fill in your data in the link which is given below, and that will take to some of our managers and they will help you invest through the queue. They can also run a presentation about that particular product and you can take a decision. Needless to say, PMS is not for everyone. PMS in India has entry-level barriers. The minimum investments which can go into any PMS scheme in India is about 50 lakh. So if you have an interest, so you can fill in your data or send us a message and we'll take it up from there. Harini, thank you very much for briefing the audience on the various aspects of quant investing, quant-based funds, what it does, why it looks interesting, why it's an interesting investing exercise between the passives and the active. Thank you very much for your time. I request you to come and appear on my channel as many times as I request for you. You have been a master presenter. You have been a person who could analyze things, what others could not analyze. It has been a great honor to carry you on my channel. I remain in gratitude to you. Thank you very much.
Thank you so much, sir. It has been an absolute honor to come to your channel and get a chance to present on such a varied set of topics within the equity investing space. Thank you so much.
Dear viewers, hope the video that I have done today helped you to understand the various aspects of quant investing and how you can get benefited from investing through the quant funds or through a quant PMS. If it did help you to understand the final point, please like this video. If you are a person who is watching this channel for the first time, or if you are yet to subscribe for the channel, don't forget to hit that subscribe button. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic, yet another expert next Tuesday. Till then, stay safe.
Press the bell icon for more details and subscribe our channel.